Right, so everyone, welcome to the first webinar that I'm actually hosting. And today I'll be your presenter. My name is Andy Chin, and I'm a Chartered Market Technician holder as well as a Certified Financial Technician holder. So we're talking about introduction to CFD trading, which is contract for difference trading. Just a brief disclaimer before we start. So anything that I share within this webinar presentation is strictly for educational purposes only. And anything, whether it's information or opinions, does not constitute as an investment advice, a recommendation, offer, or solicitation to purchase any of the investment products. So no liability will be accepted for any loss arising whether directly or indirectly as a result of any person acting on this information. Anything that I said, whether it's opinions, references, are of my personal views only. Roughly some brief things about myself. So as I mentioned, my name is Andy Chin. I used to be a former proprietary trader at one of Malaysia's local bank, and I was trading Hong Kong equity options with that bank. So right now I'm a full-time index and currency trader. So I moved out of there a few months ago. Now I'm focusing full-time on trading index and currency. What is a stock market index? I get that question quite a lot. So I get that question quite a lot of what a stock market index is all about. So we put an example, I show you on the screen as an example. Every single stock has to list somewhere, regardless what stock it is. I'm sure most of us here are Malaysians, so we take, for example, CIMB, where I put the example here is Tencent. So CIMB is actually listed on the Malaysia Stock Exchange, and Tencent is actually listed on the Hong Kong Stock Exchange. Every stock exchange has its own stock index. So for example, the Hong Kong Stock Exchange is Hang Seng Index, whereas the Kuala Lumpur Stock Exchange is called Kuala Lumpur Composite Index. And different index has different way of calculating it, and different index also has different components of stocks within the index itself. So let's say, for example, the Hong Kong Hang Seng Index, it consists of the top 50 stocks by market cap of the whole Hong Kong Stock Exchange itself. So like, for example, the Kuala Lumpur Composite Index is actually the top 30, whereas the Hang Seng Index is actually top 50. Does it really matters to know whether how the stock market index perform? It actually does. The whole index performance actually shows the performance of the whole country's economy itself. Like for example, we take Hang Seng Index. The total market cap of the 50 stocks listed on the Hang Seng Index itself is actually equivalent to 60 to 70% of the total market cap of the whole stock exchange. The last I checked is roughly around 66 to 67%. So you can imagine just 50 stocks. There are thousands of stocks listed on the Hong Kong Stock Exchange, but just these 50 is enough to control 60 to 70% of the whole stock market itself. And the stock market index is actually some sort of a leading indicator of the economy. If the stock market were to do bad, the economy tends to go down sooner or later because the GDP reports and all, they tend to come out a bit delayed. So the first thing that reacts the fastest is actually the index, the stock market index. And also when the stock market index moves, then only currencies and commodities will tend to move. Let's say your gold and your currency pairs, this and that, actually only moves if the whole stock market index moves. If like this whole 1 month, when Dow Jones and Hang Seng Index is moving very volatile, so every single currency pair, regardless of which currency pair you trade, is actually much more volatile, including commodities for gold. The only commodity that is not really affected by this stock market index move is actually crude oil. Other than that, most other commodities actually move along together with the stock market index. That's why this stock market index is actually something that is good to know. You may not need to trade it. I trade it for as a full-time basis, but you may not need to trade it, but you actually need to know how it's performing. So the stock market indices that I personally trade is actually, it comes from two stock exchange. One is Hong Kong and one more is the US itself. So in Hong Kong, the main index is actually Hang Seng Index, whereas for US, actually there's three major index that people normally trade. So one of it is Dow Jones Index, another one is NASDAQ, and we have S&P 500. But among all three indices, I only trade Dow Jones Index. Why? Because Dow Jones Index is actually the most volatile index among the three. And comparing whether Hong Kong or US is more volatile, actually Hang Seng Index is the most volatile. I believe Hang Seng Index in the whole world is the most volatile index there is. And I tend to like to trade more volatile stuff. So Hang Seng Index is actually my personal favorite, even more than Dow Jones Index. But Hang Seng Index actually the top 50, but Dow Jones Index is actually the top 30. That's why you have different components inside and your different numbers inside. Like Nikkei is actually the top 225, something like this. So different stock market indices have different components, different calculation. So there are the currencies that I trade. There are actually 8 major ones around the world that are most commonly traded. You don't say MYR inside there, and SGD is also not inside there actually. So the 8 most commonly traded ones actually the USD, UR, GBP, CAD is Canadian dollar, CHF is actually the Swiss franc, New Zealand dollar, Australian dollar, and the Japanese yen. So these are the 8 most commonly traded. You can see I actually separated it into 2 rows. So the top 5 pairs, 5 currencies that are most regularly traded during the night time of GMT plus 8, which is the time zone that I'm in. So these normally are most active during the night. And NZD, AUD, and JPY are most active during the morning. So that's why you can see I separated it like this. So when you cross and combine the currency pairs, there are actually total of 28 out of these 8. And I personally only trade 19. It's up to you. There are some people who only trade 1 or 2, but I personally only trade 19. So which are the pairs that I don't trade? Recently, I've stopped trading GBP pairs because GBP pairs has been extremely volatile due to all this rise and drop of the stock market indices. That's why you tend to see GBP is the most volatile. Among 8 of these currencies, GBP is the most volatile, especially when stock market indices itself is volatile. That's why you need to know how to adjust. So I've stopped trading GBP and I only trade the other 19.